Question on your screen. Given the balance sheet of a company with the total asset turnover ratio of 3. Now, asset turnover ratio, we did the turnover ratios when we were doing ratio analysis. And basically, the asset turnover ratio is telling you how effectively the assets are being used to raise sales for the company. So, that is 3 times. Your fixed operating costs are 1 lakh and the variable operating cost ratio is 40%. The income tax is 30%. You have to use the information given to calculate the different types of leverages. Okay, so the information required to calculate leverage is derived from the income statement, and for that the starting point is the sales revenue of the firm. So directly no sales revenue is given to you. You will be using the asset turnover ratio to calculate the sales revenue. Accordingly, the asset turnover ratio is equal to sales divided by the fixed assets. Sorry, we take the total assets, not only the fixed assets, but the total assets of the firm. So, this is the sales value you need, and your total assets are 2 lakh. So you get the value of sales as rupees 6 lakh. And now you can start preparing the income statement to calculate the other leverages. Start making the income statement. So for interest, you are given debt in the balance sheet on the liability side. It is a 10% long-term debt, which means that the value of interest will be 8,000, and the tax rate is 30%.
Ma'am, we paid 2.5 lakh.
Now your voice is breaking. Please
मैम
repeat.
अर्निंग बिफोर इंटरेस्ट एंड टैक्स में से 8,000 माइनस करोगे तो 2,52,000 आएगा अर्निंग
अच्छा
बिफोर
ठीक
टैक्स.
है ठीक है ठीक है. Okay. You were also saying the same thing. Okay, beta. Thank you. So your tax comes to 75,600. This is 1,76,400. Okay, now you can just put in the values in the leverage formula. And just give the answers and also check the answers. Okay, 1.385, yes, and this is 1.03, 1.428. Okay, so if you are given a question like this is how you proceed to solve the income statement and then the types of leverage. So I hope all of you are getting the same answer. Okay, we move to the next question. So here is the next question. So given the data with respect to the capital employed for two firms A and B, after that the equity shareholders of A Limited find to their dismay that in spite of the same return earned, their earning per share is much less as compared to B. Now both the firms, they are employing 5 lakh of capital. If you see, equity plus debt is 5 lakh and the return is the same 20%, but the earning per share of B Limited is higher as compared to A Limited. Now that is given to you in the question. You will be requiring the EPS first to comment on the situation. You are required to state for the this will be the dissatisfaction of the shareholders of A Limited. The reason for such lower EPS, assuming the tax rate to be 30%, and you are given the EBIT for both the firms. So first step is to calculate the EPS for firm A and for firm B. And then we can give the reasons as to why, in spite of the same return on capital employed, both the equity shareholders are getting a different earning per share. So you start with EBIT and you need to reach to the EPS of the firm. no preference dividend given, so this is the earnings available to equity shareholders, and then you calculate the EPS. Please start solving. Earnings available to equity shareholders. EAES is actually calculated after deducting the preference dividend from profit after tax, but since there are no preference shares, your profit after tax is earnings available to equity shareholders. Then again, it is upon the firm whether it is distributing all this as dividend or retaining the money for future investment opportunities. Okay, so the number of equity shares for firm A is 50,000 and for firm B is 25,000. So accordingly, EPS is rupees 1.4 per share for firm A and 2.17 per share for firm B. Okay, and what is the reason behind this? What's the reason behind this? It is the, yes, Garima, absolutely right. It is the judicious use of debt by B Limited or financial leverage, or a better term is trading on equity by B Limited, which is leading to enhanced EPS for the shareholders of company B. Then again, the profits or the earnings of A Limited are being divided among 50,000 shareholders, and for B Limited, the earnings are being divided only among 25,000 shareholders. So, if at the last point you see, even though the profit after tax or earnings for equity shareholders are higher in firm A, because the number of equity shareholders are more, the per share earning is falling. Okay, so these can be the two reasons for a lower EPS for firm A vis-a-vis firm B. Okay, any doubt, any question? Please complete this. So you are giving two reasons for this difference in spite of the same return on capital employed. Okay, let's move to the next question. Okay, so this is the question. You are given the data with respect to a company, then you are given the income statement, and you need to calculate uh, in case in part 1 using the concept of operating leverage, by what percentage will EBIT increase if there is a 10% increase in sales, and likewise you have second and third part. Also you need to verify the results for each part that you are answering. Okay, so I'll solve for the first part and then you can accordingly solve for financial leverage, and the last is the combined leverage because it is giving you the relation between sales and taxable income. Okay, so let's start solving with operating leverage and then we can move ahead. So this is 3 lakh by 1,50,000. You get a value of 2 for operating leverage. You put that in the second formula. So with a 10% increase in sales, your EBIT is increasing by 20% in the first part of the question. Now you need to verify these results, which means we'll have to prepare a fresh income statement with this increase in the sales volume. Okay, so here I am preparing that statement. तो ओरिजिनल सेल्स के साथ आपको पता है so in the first part you take sales as 5 lakh and in the second part you take it as 5 lakh 50,000. The variable cost to sales ratio is 40%, means this is 2,20,000. So you can see that the percentage increase in EBIT as a result of 10% increase in sales is coming to 20% when you put in the values in the income statement too. So this is how you verify the results. Now use the concept of financial leverage in the second part. Move from EBIT to EBT and then verify the result. In the second part, please start solving and first give the answer for financial leverage. How much is it coming to? How much is the financial leverage coming to? 1.2 and the answer for second part, what is the percentage change in the taxable income because of increase in EBIT? Again, there is a okay. Now there is a 6% increase in EBIT. So 1.2 into 6, that will give you a 7.2% increase in the taxable income. So your EBT or profit before tax increases by 7.2%. Please verify that. You can start from EBIT and move to EBT for verification. And then come to the third part, which is on combined leverage. Yes. First verify the second part. Are you getting the same answer? Okay, so I hope the result is verified for the second part. Now move to the third part. You're now again using the concept of leverage to see by what percentage is your EBT or profit before taxes changing with an 8% increase in the sales. So here you are using the concept of combined leverage, which is the product of operating leverage and financial leverage. The answer for combined leverage is 2.4. Give me the answer for third part. What is the percentage increase in EBT? Solve and tell what is the percentage increase in EBT. Okay, so simply 2.4 into 8, which is a 19.2% increase. So now you need to move from sales to EBT. जितना आपको इनकम स्टेटमेंट क्वेश्चन में गिवन है उतना आपको थर्ड पार्ट में रीवर्क करना पड़ेगा so that you can verify the result. So I hope all of you are verifying the result.